start over. Self-employed health insurance deduction. So this is another one of those adjustments to income. Be careful, as I had mentioned before, so the word self-employed is in here. We talked about 1/2 of self-employment tax as a deduction. This, we're talking about self-employment health insurance for the self-employed. Now there are some special rules with regard to this particular deduction. And as I mentioned here, so it's limited in 2 respects. Taxpayers cannot take a deduction for any amount in excess of net earnings from self-employment from the trade or business under which the coverage is provided. This means that. So if we have a self-employed income of $100,000 and we have deductible expenses of $90,000, okay, this is our net income from self-employment, $10,000. If we have we pay for health insurance and it meets the other requirements for self-employed health insurance, if we have, let's say our insurance is $12,000, costs us $12,000, we can only take a deduction for $10,000. Okay, this cannot be below what our net income is for self-employment. So again, we're going to be limited just to $10,000 because it can't bring us below 0. Okay, so that's
what's the deduction again? It's
self-employed income, and then just deductible expenses.
Okay.
Yeah, miscellaneous deductible expenses of $90,000. So our net income from self-employment, $10,000. So, and as I mentioned here, reduce gross income by the regular expenses of the business, as well as the deduction for 1/2 of the self-employment tax. So in addition to this, I didn't know they mentioned it there. I thought they'd save that for chapter 6. In addition to this, so if we had net income from self-employment of $10,000, and remember our self-employment tax in total would be 15.3%, right? We've got our 12.4% for Social Security and 2.9% for Medicare. Because we're self-employed, we've got to pay both halves of that. So 15.3%, $1,530. We divide that by 2 to get our deduction for self-employment, our adjustment for self-employment tax. So 1530, what we have, 750, 765. This is 1/2 self-employment tax. So we'd be left with $9,235. We would be limited, our deduction, our self-employment health insurance deduction would be limited to $9,235. Okay, does that make sense?
No, why is our tax half off?
What's that?
Why is the tax half off?
Because this is the deduction for 1/2 of self-employment tax. We talked about that on Thursday. Yeah, the one just before this. So this is a separate deduction or adjustment, right? It's just that this net income then would be reduced by 1/2 that deduction amount. So this is our limit for self-employed health insurance deduction. Questions? Questions? No? Okay, so that's one limitation to it, is that we're limited by income, or self-employment income. Minus that one adjustment there as well. Okay, so we got another example here. We got Theo. I had net earnings of $2,800 from self-employment. She paid $160 a month for health insurance. I don't know where she got health insurance for $160 a month, but I'd like to know. So $1,920 per year. So she would be entitled to a 4 AGI deduction of $1,920 because it's still less than her net earnings. So she's good. So whichever one is less, the amount you actually paid or your earnings, your net earnings from self-employment. If her net earnings from self-employment were $1,500, her deduction would have been limited to $1,500. Now, in this example, they did not include the 1/2 of self-employment tax in that calculation. Okay, but that does apply. And I think you got your problems include that, so don't forget to include that part. Questions? You want me to do another example?
Yes.
Yes, okay. Maybe that's what I need to say instead of, anybody have any questions? Do another example. All right. So, let's say we've got gross self-employment income of $50,000. And we have deductible. I say deductible expenses because as you'll find out in chapter 6, not every expense is deductible, okay? Deductible expenses of, let's say, $38,000. So our net earnings from self-employment are $12,000. Let's say we have, well, we'll get a little bit more complicated here. Let's say our health insurance premiums were, I'm gonna guess here the number that'll get us kind of in between, $10,000, $10,500. Okay, for the year, total $10,500. The first thing we have to do is also subtract the 1/2 of self-employment tax. So we gotta calculate what that is. So remember, Social Security and Medicare, this is our self-employment tax. Social Security for self-employed individuals is 12.4%. For Medicare, it's 2.9%. Or 15.3%. If you recall from payroll accounting, 1/2 of those amounts was what, the employer pays half, the employee pays half, but when you're self-employed, you get to pay both halves. So 15.3% is our total self-employment tax rate. So what we would need to do is determine how much in total self-employment tax we have. So over here we've got 12,000 times 15.3%. What do we have there? Somebody calculate that for me. I tried to use a calculator here, but I'll mess up my mouse.
1836.
1836. This is our self-employment tax. Now, we have that 1/2 of self-employment adjustment, right? So we gotta calculate that. So times 0.5. What do we have? 918?
Yes. Yeah.
So $918 is 1/2 of our self-employment tax. So we have to further reduce our net earnings by $918. I'm gonna make this bigger.
So we can't forget, after we already divide the 15.3 by 2 to take it in half again?
Yes, then take it in half again,
Okay.
because you get a deduction for that. But then that further reduces the amount that we can take for health insurance. I just made this bigger because what I wanted was for this number to end up being less than this. So we have 11,000. We have, why am I struggling with this? 82?
Yes.
Okay, so 11,082 is our adjusted self-employment income. We're able to deduct the lesser of these two. So this is the amount that we can deduct. For self-employed health insurance. Okay, so we also get this deduction for the $918 separately on our Schedule 1 as an adjustment. But then we also get this adjustment on our Schedule 1 for self-employed health insurance. But but it's not, we don't get the full amount that we actually paid because our adjusted income is less than that. That make sense? Okay, so there's two parts to that, and like I said, the example that they gave us here didn't go through that part. So that's one limitation. Come on. No, it's not moving. Too much. Okay, so the second limitation is not a dollar amount limitation. It has to do with whether or not the individual has access to health insurance through an employer or through their spouse's employer. So, if there is other health insurance that is subsidized, meaning the employer pays part of it, then they cannot take this deduction. Okay, so for example, if you have, say you're an employee, say you're employee of DMAC and you make, I don't know, $60,000 a year, whatever. And DMAC provides health insurance that is subsidized. They help to pay for that health insurance premium. But you also have a side hustle that is self-employment income, and you make another $60,000 through that side hustle. Well, even if you pay, say you decide you're not going to take DMAC's health insurance. You're going to turn it down and buy your own health insurance. I don't know why anybody would ever do that, but if that is the case, so you pay out of pocket for that health insurance, you don't get to take this deduction because you have access to the DMAC health insurance, right? You have access to subsidized health insurance through an employer. Now, say your spouse is an employee at DMAC, but you have your own business. You are eligible to get subsidized health insurance as the spouse of an employee at DMAC. So even though you have your own self-employment income, and maybe you decided to buy your own insurance and not take DMAC's, you don't get to take this deduction because you have access to subsidized health insurance through an employer. So even if it's not your employer, if it's your spouse's employer, that still counts. Okay, so that's the other one. So the eligibility for alternative coverage would be determined on a monthly basis, meaning, okay, let's say in June your spouse no longer is working for DMAC, and for the rest of the year you don't have access to health insurance. Well, for the last 6 months, then you would be able to take whatever the premiums that you paid in the last 6 months. Okay. Let's see. Subsidized health plan, one in which someone other than the employee pays for part or all of the cost of the plan. So even if it's just $100 out of an $1,100 premium, it's subsidized, and that would count as well. So an example here, we got Sophia. Sophia's self-employed, had net earnings from self-employment of $17,000. So her net earnings from self-employment. She has an individual-only health insurance policy through her business for which she pays $145 a month. An unrelated local business employs Miguel, her husband. Miguel's employer provides health insurance coverage for all employees and pays $100 toward the monthly premium of each employee. Miguel can cover Sophia under his policy. So that's key as well. If they didn't allow spouses on the health insurance plan, then Sophia's health insurance plan would be fine. She would get to deduct it, right? But she has the option of participating in Miguel's health insurance plan. The couple has chosen not to do so because the cost would be higher than Sophia's current policy. In this case, Sophia cannot deduct any of her health insurance premiums as a self-employed health insurance because she is entitled to participate under a subsidized plan. The fact that she chooses not to be covered under that doesn't matter. Now, she could possibly, if she was eligible, the premiums that she paid could be an itemized deduction, and we'll talk about that in chapter 5. But for purposes of the self-employed health insurance deduction, she cannot participate in that. She cannot get that.
So she would use the self-employment
She just wouldn't get to deduct this.
Right.
Yep.
Okay.
Yep. Questions? Alright.
So,
Mhm.
if the amount is still the same, so 100,
Mhm.
so she can't,
If she is, if she is, okay, so if there is no subsidized amount, is that what you're asking?
no, if the amount is the same, because here is 145
Mhm.
and 100, so if. still
Even if
one-
it's the same amount, yeah, the amount doesn't matter.
Oh, okay.
The amount doesn't matter. Right. So here's an example, I think if it's not for the full year. So we've got Miguel and Sophia. Miguel did not begin work at the business until April 1st. So for January, February, and March, they were covered under Sophia's plan. They didn't have access to subsidized health insurance. Both of them were covered under a group policy that cost $300 a month from Sophia's business. So on April 1st, Sophia changed to an individual policy at $145 a month. How much can she deduct for self-employed health insurance? In this case, because she paid $300 a month for her and Miguel for the 3 months that he was not covered, that neither of them was covered under a group plan, they can deduct $900. The $300 a month times the 3 months. So the fact that she continued on it, paying $145 a month, simply means that the rest of the year, she's not gonna be able to deduct that as self-employed health insurance. Make sense? Yes, no?
Yes.
Yes? Okay. Anybody else? Okay. So long-term care, that's like nursing home, assisted living care, usually those types of policies, and they would count for self-employed health insurance deduction if you don't have access to it elsewhere. Vision insurance would count, dental insurance would also count. Those are fine, medical, dental, vision, long-term care. But there are some special rules here, and we'll look at this. So Patrick is self-employed. He's entitled to participate in a subsidized qualified long-term care insurance plan through his wife Jennifer's employer. So Jennifer's employed, he's self-employed, he can participate in Jennifer's long-term care plan. The general health care plan is not subsidized, so that's a key as well. So if they'd have to pay 100% of it. He's entitled to participate in both plans. The long-term care, even though this is subsidized, the long-term care he can participate in. He chooses to obtain general health care and qualified long-term care insurance through his own business. He will be able to deduct the cost, back up. The subsidized long-term care is not, he cannot deduct that because it's subsidized under Jennifer's employer. So he can deduct the cost of the general health care plan, but he cannot deduct the cost of the long-term care insurance. So if he's got access to a subsidized plan, be it dental, vision, long-term care, health insurance, access to it, even if they choose not to take it, that means that they cannot take the deduction for self-employed health insurance. Okay? Okay. So, individuals who are partners in partnerships are considered to be self-employed. A partnership is where you've got more than one person in business together, but they're not a corporation. They're just going into business together. It's as though you've got two self-employed individuals, or 3 or 4 or 5, however many partners there are, right? They're treated like they are self-employed. So partners in a partnership are also eligible for this health insurance deduction, the self-employed health insurance deduction, because they're considered to be self-employed. If they've got income, you've still got that net income requirement. right? So as long as they've got income. Shareholders in, now, subchapter S corporations, we're gonna talk about these in more detail in chapter 15. S corporations are a special type of corporation that's kind of like a hybrid between a partnership and a corporation. Owners of S corporations, as long as they own more than 2% of the stock in the S corporation, are treated like partners in a partnership for purposes of this deduction. So they would also be eligible. But again, they've got to have net earnings from self-employment. Okay? Questions about that? That's getting a little bit into the weeds here.
So,
Mm-hmm.
partnership can pay Medicare or
The partnership could pay health insurance on their behalf. It's considered to be income to the partner though. So essentially it's kind of in and out. So if a partnership, and this is getting a little bit deeper than we need to, but just as an FYI. So with a partnership, give you a little preview here, chapter 14 is partnerships. Okay, so we've got partner A and partner B. The partnership, and they're 50-50, this is important. The percentage is important, because if it were 40-60, then the income would be split differently between them. So let's say the partnership had net earnings of $100,000. Partner A is going to claim on their tax return $50,000 of income. Partner B is also going to claim $50,000 of income. Now let's say the partnership pays for their health insurance. Okay, so health insurance of $10,000 each. That $10,000 is going to get added to their income. It's going to be taxable to them. So now their income is $60,000. Sorry, no, that's squeaky. But then what happens is that each partner gets to deduct as self-employed health insurance this $10,000 on their tax return. Okay, so this would become a deduction on their 1040. So 50,000 each. Now the bad part is the entire 60,000 is subject to self-employment tax. The 10,000 is only going to offset income tax, not self-employment tax. Okay, but that's kind of how that works. That's no charge, no extra charge for that information. Okay, that's above and beyond. All right. Questions about the self-employed health insurance deduction? So remember, there are two big limitations to it. One is that it is limited to the net earnings from self-employment. If you're a partner, it would be limited, like if this were 10,000, no, that's wrong. If this were, let me think here. If this were 0, well, no, if this were negative 10,000, because it's possible to have loss. Negative 10,000, then they wouldn't get to take this deduction. Because they would have, if that was negative 10,000, then they added the 10,000 for health insurance, this would be at 0. They would not get to take the self-employed health insurance deduction. So the first limitation is you've got to have the net earnings from self-employment, adjusted for 1/2 of the self-employment tax. Second limitation is that you have to, you cannot be eligible to participate in subsidized health insurance from another employer, whether it's your employer or a spouse. Make sense?